Margin calls trigger panic sell-off in China's stock market. Welcome to the Shikama Live Show with your host, Shikama. Mainland shares suffer some of the biggest falls in years, capping fortnight of pain for investors in Shenzhen enter bear market territory. Mainland shares suffered some of their biggest falls in years yesterday as investors dumped stocks indiscriminately to meet margin calls. The blue chip CSI300 Index fell 7.9% to 4,336.19, its biggest drop in 7 years, and the Shanghai Composite Index lost 7.4%, or 334.14 points, to close at 4,192.87. But the worst damage was in Shenzhen, where the city's benchmark index fell 7.87%, or 213.7 points, to 2,502.9, officially entering bear market territory after a fall of more than 20% from a June 12 high. In the past 2 weeks, 14 trillion yuan, that's HK $17.4 trillion, has been wiped off the value of mainland stocks, some 20% of mainland market capitalization, and 3 times the value of Apple, the company with the world's biggest market cap. Speaking at a briefing yesterday, China's Security Regulation Commission spokesman Zhang Xiaohun hinted that the central government would not be intervening to staunch the outflow of funds. Quote, China's ongoing reform, ample liquidity in the market, and a shift from bank deposit into the capital markets among household savings will continue to underpin a vibrant stock market even after a few big corrections in the market recently, Zhang said. Almost 80% of index constituent members fell yesterday, with nearly 2,000 of the roughly 2,800 listed companies in Shanghai and Shenzhen slumping by their 10% daily limit. A semi-annual audit of listed firms, including banks and brokerage houses, meant companies who trade the markets had to dump stocks to return cash to their balance sheets, compounding the overall sell-off, said Stevenson-Yang, founder of J Capital Research. Despite a fortnight of heavy selling, both Shanghai and Shenzhen are still posting heavy gains. So far this year, Shanghai is up 29.6% year to date, and Shenzhen is up 78.6%. Outstanding margin loans total 2.2 trillion yuan on Wednesday, as margin calls forced investors to cut 61.5 billion yuan in leverage in the first half of the week as shares fell, data showed. Among the few firms to post a gain for the day, brokerage giant Guotai Yuan Securities soared 44% to 28.3 yuan in its first trading day in Shanghai. Mainland internet users painted a pessimistic picture of the mainland market's prospects in posting in Weibo microblogs. Quote, I beg you, the stock market, to come back to life, said actress Wang Ling. Xiao Lei, a finance blogger, said, quote, China's stock market can't stand attacks from short sellers like George Soros and Muddy Waters, as there is virtually no market-based regulatory oversight. In Hong Kong, a more orderly sell-off saw the Hang Seng close down 1.78%, or 481.88 points, to 26,663.87, its biggest one-day fall in almost a month. The H-share index of mainland companies dropped 2.82%, or 379.71 points, to 13,088.19. Regional markets also fell, taking their cue from the Wall Street amid concerns over drawn-out talks between Greece and its creditors. Japan's Nikkei 225 slipped 0.31% to 20,706.15, and Australia's ASX 200 dropped 1.54% to 5,545.9. Thank you for watching the Shikama Live Show and all of these horrible numbers that I can't say for whatever reason. Too much coffee. I need to lay off the coffee. I've been up 3 days.